Joining me right now, the Wall Street Journal's chief economics correspondent and Fox Business contributor, John Hilsenrath. John, good morning. So does the U.S. economy do better under a Democrat in the White House?
Well, you know, I think you have to take those kinds of analogies with a grain of salt. You could use that same argument, excuse me, to say the economy does better when you have Republicans running Congress, right? Because Republicans were running Congress in the 90s. They ran Congress over the last few years as the economy picked up. You know, I think that's political rhetoric. I don't think there's a lot to base an economic analysis on that.
Yeah, you know, I think it's really interesting that she's mentioning her husband. We all know that the economy did do very well when President Bill Clinton was in the White House, but President Obama is about to endorse her, John. So what does she do here? Does she keep going toward her husband and what was going on in the 90s, or does she follow Obama, where we know Obama has not overseen 1 year of even 3% economic growth, and we know where we are in terms of this recovery right now?
Yeah, I think she's trying to have it both ways, and what she was saying yesterday was kind of a move towards the middle by embracing her husband's economic policies. The problem with that is that a lot of the things that worked for Bill Clinton haven't worked for the American economy over the last few years. You know, you just had a guest on talking about how technology is not the big driver of economic growth today that it was many years ago. You know, in the late 1990s, that drove the economy for Bill Clinton. We're not getting that out of the tech sector today. And trade has been another really important drag for the U.S. economy. We keep talking about China. You know, we let China into the WTO at the very end of Bill Clinton's administration, and that proved to be a huge shock to the American economy. So the answers that worked 15, 20 years ago are not going to be the answers that work today.
Yeah, that's a good point. Take a drink of water, John, while we look at the billionaire George Soros' plan taking McDowell. He wants to be trading again. John mentioned China. One of the issues is China, right?
Right. I find that from a political perspective, it's very ironic because you've had 7.5 years of a Democratic administration, increasingly progressive. George Soros, if his philosophy worked, then he wouldn't be betting against the U.S. economy at this point. He is betting against U.S. stocks, going for gold, and going for gold miners as well. And Greg Zuckerman, who broke this story, actually did communicate with George Soros via email. And it seems like his primary concern is China, precarious situation that China essentially can't get its arms around its weakening economy. And then he's worried about Europe, even though it seems like that maybe Britain won't leave the Eurozone or the EU, that he still is concerned that the EU will collapse in on itself if Britain does leave.
And we don't know. I mean, the markets, hey, John, the markets are indicating what Dagan just said, right? The way the British pound is trading, it looks like the markets are saying that they won't leave the EU, but then again, the poll will say that the willingness to leave the EU is rising.
You know, and I think what Soros is worried about is either way, whether the UK stays or not, there's so much pressure to break up the euro, and he's counting on the union falling apart. And this is the guy who bet against the British pound and made $1 billion on it in 1992. So you have to pay attention to him when he's making bets on Europe. His other really big worry is China, not so much the U.S. I find it interesting that his betting on gold, because gold is a very peculiar commodity. You know, if I were betting against the global economy, I would be betting against a range of other commodities like oil prices.
I don't even look at gold as a commodity. I look at it as a hedge, right? I mean, gold is like, I mean, it's money. I mean, so that's, yeah, go ahead.
But a lot of other people are, too, because it's up 19% in the past year, which really tells you something about nervousness. And it's not just Soros. It's also Stanley Druckenmiller is also very concerned, not only about the U.S. stock market, but the world market. And finally, on Europe, I would add Greece, because once again, Greece is that, you know, that little boy with the finger in the dike, and if they have to actually default again, and we go through this again, on top of the migrant pressure and Brexit, I think you could have a real mess.
Yeah, I think migrant pressure is where the problem is, right? I mean, the fact that all these countries are really, really trying to figure out how to deal with it. I mean, I was talking to the Swiss about this, and they're like, we don't know what to do.
That's one of the reasons. That's one of the reasons this whole issue came up, right? For the UK to consider leaving, and this domino effect taken, right? Do we see Scotland? Do we see Catalonia? Do we see, you know, Greece follow suit and leave the Euro?
He does, and Soros points out that it's the migration crisis in Europe that's putting incredible financial pressure on the continent.
John, good to see you, sir. Thank you.
Thank you.
John Hilsenrath joining us from the Wall Street Journal.